Good weekend, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Friday evening, the 3rd of March, 2023. It's your weekly edition, so we're going to look and see what the weekly charts look like. Now, on a daily basis, my gosh, what a strong rally in the stock indices. I, for one, didn't see that coming. Definitely wrong on my part. I didn't see that coming. And what was interesting, it never backed off. The market went up 150 points. Maybe it backed off 50. I'm talking the Dow. Then it went up to 250, back off 50, and it kept climbing all day. Very unusual action through it the whole day. The craziness was happening not only there, but look at the ranges that you have in the energies. And the reason is a Wall Street Journal article came out early in the morning. I wrote about it, and it was that the UAE, United Arab Emirates, was asking OPEC to leave them. They want to produce more oil, so the story was they're going to leave. Well, now, if you break that apart, you're going to flood the market with oil, even just the UAE doing its own thing. Later in the morning, denied by the UAE. No, that never occurred. That conversation never happened. The market completely reversed, went up. So you got to be careful. I'm wondering if the Wall Street Journal had its facts right, and if it did, maybe the UAE is just saying, maybe we don't know what's going on behind the scenes. I don't know. A heck of a rally in bonds and notes, even with, did you look today at the ISM numbers, and they're showing you again, the employment, how strong it is? And what goes on? The market was able to rebound. So nothing goes in a straight line. But do you honestly think the Fed's not going to keep raising interest rates? Now, here's the two schools of thought. I was watching Jeremy Siegel today with his school, and he's been very wrong, this market, by the way. Now, maybe the market will go to 5.5. A month and a half ago, it wasn't going to go to 5%, he was saying. Now it's up. Just because he's at Wharton doesn't mean he can't be wrong. And basically, what has happened is the labor market is turning the economists upside down. As long as business wants to hold on to labor and hire anew, then what happens is you get just what you had this week, and you have the unemployment claims, they don't fall enough. Now, we're going to get JOLTS number, and we're going to get the big jobs number next Friday. All eyes are going to be on that jobs number. Does it wobble finally, or does it continue to show the strength? If it wobbles, the bulls will grab that and say, this is the beginning, it's coming down. The Fed can stop earlier because the lag is hit and it's embedding. If it doesn't do that, then what will happen is the other people are going to come out and say, no. The economy's so strong, even the interest rates aren't stopping the employers from hiring. Plus, you got spring, summer hiring. There's more events taking place. You may not agree with that, but those are the two school of thoughts, and that's where the fight's going to be. So if you were to ask me the rest of the week, of Monday through Thursday, are there any reports I think that are real big going to be market movers? Not as big as Friday's jobs report. And then after that, remember, we get ready because we got the European Central Bank coming out with their monetary policy. They're looking like a lock to go up 50 points. And ours now, the question is 25 or 50. Which way do they go? And I think that comes a real argument for 25 if you get the wobble, and possibly a 50 argument if you stay strong. If you get real strong, then maybe they have to go to the 50 to just say, let's nip this thing. It's going to be a rough decision. Either way, where do we go? Well, we're going to higher rates. How much higher? That's going to be the argument. 5.25, 5.75. Those seem to be the numbers people are throwing around. So we'll see where they go. All right. Let's come over here and take a look at what we've got. I'm going to repeat. On a monthly chart, you're still under the 18-month moving average. What you've done is, since you made this low, you've recovered, okay? So from the, 3,600 level, you've had a nice bounce, and you're near the highs of the bounce and near the 4,200 level, which I think we'd all agree, and I'm talking the 18-week average, we're at 40.49, but we're coming up, and will you be able to make it that high? A lot of us, me included, thought you were going to come back down much sooner to challenge this. That hasn't occurred. When we come and we take a look on the E-mini close-only chart, what the market did is the market, and we can see this very clearly here, The market had had a heck of a rally, got up all the way on a closing basis to 41.47. A correction then began, but remember, you're still over the 18 weeks. So the support, if you fall back, my theory is markets like to go to a neutral number on a chart. It's the 18-week on a weekly chart. It's one of the popular numbers, and fight a battle. You may not agree with me, but I can prove my case over and over. Here's the market giving it, and there you're making your move. This is the 24th, and this is where you're at now. If the market rolls and closes underneath the 24th, I think you enter your bear trend again. If the market doesn't, you're staying with the bullish bias. You've got your line in the sand. It's staring you in the face, and the reasons for it are there. I think you understand them. Now, when we go to a bar chart, it's a little bit different. So now we get the bar. We can see we have a pattern here of a higher high and a lower low. That is not an uptrend. When we take a look at the moving averages, what did you do? Well, in this particular case, you peaked out at the 100 week. You fell back, same theory. If you got the 18 week there, you fell back to the 18 week and you made a lower low this week and you closed higher. Okay, but that's not a trend. On the next chart, you see that the Bollinger Band in the 100-week stopped the rally. So when you stopped the rally, you ran into the brick wall there, you fell back to a neutral zone, and that's where you're at. You're in a neutral zone. There is no setup here. So while we have on a closing basis what could be the bearishness, we don't have that same pattern at work at this point in time on this chart. Momentum-wise, we had gotten overbought. The market's been correcting, and now we're not overbought on a weekly. Overbought, I define as either number being over 70 on the slow stochastic. Now, my slow stochastics are going to look different than yours. And that's because you're using the factory one that comes with your charts, and I modified mine. And the man that founded slow stochastics, George Lane, I showed him what I had done, why I had done it when he was alive, and he thought it was pretty clever. And then I kept going with him over time, and he liked it. He definitely mentored me on this. The man that created it definitely mentored me. But he didn't use slow stochastics. He used slow stochastics. He wasn't using the Bollinger Band with it. I incorporated the Bollinger Band with it much, much later when I met John Bollinger. I used to have a TV show, Stocks, Options, and Futures, that he would appear on. It was all over the country. What is now CNBC was the old financial news network, and I had I think it was a Wednesday noon show, national, and it was quite large. And then, of course, you can't compete when all the car companies and everybody starts giving the ads for the other stuff. But that's what they had to do at that point. Well, in any case, I started saying, I said, you got an algorithm that is telling me that 95% of the time it's going to tell you the market's not going to stay over it or under it. I said, that's like saying I have a resistance point that the first time the market hits it, why are you hanging around? And the other, I said, it's like saying in reality, hey, it's Vegas. I'm going to win 95% of the time. Bingo. Tying the two together. I'd created courses, and the rest is history, and you can take those. They're on our website for you. In the Dow Jones, you got a higher high, lower low. I'm sorry. I know how strong today was, and I know that the market got down to the Bollinger Band and held it. That was my problem. If I had to look back and say, why am I bearish when you just hit that, and why not wait for the rally, that's what I should have done. We all make mistakes. It was definitely, should have waited on this one, but I just blew it. In the Nasdaq, lower highs, lower lows, no. This is just a market that ran into the buzzsaw, pulled back. It's not trending. It has bias to the upside, and it's looking for its support right there. The Russell is similar. Got to the Bollinger Bands, went into the downtrend on the swing line, pulling back. If you close under the 18-day average of closes in these indices, they all turn down. Without that occurring, they have the bullish bias. It's there for you to see. Look at the weekly charts. They're telling a better story than the dailies. The dailies have the noise. These are a little bit cleaner right now. It's not always that way. In the bond market, I can see why we're bouncing. You're very close to the Bollinger Band bottom, and you have momentum that's already oversold. In the 10-year, you went right to it. This one didn't surprise me. And this one, I had been wanting earlier in the week to be short on the 10-year and the 5-year, and I pulled my trades because I saw we were making that run to the Bollinger Band, and I finally said, no. I don't care how bearish I am, got to look at the weekly chart, and that's screaming, don't sell me into that Bollinger Band. At least that's my opinion. In the dollar index, we've had a heck of a correction. We had a market that's been bearish. Then we went into one of these plays where you lose the embedded reading, which calls for the market to go back to the closest main moving average. Well, school time, 200-day, 100. It's going up with the swing line to that number. Now I'm waiting for the new trend to set in. Do I think you're going to get it this week? Maybe not until we see Friday's jobs data. So what did I start doing today? I had clients into some trades in the peso and the Canadian dollar. I cut everything down. I realized I'm looking at the stock indices and I'm trying to figure out what's going on because I'd like to understand what it is. Doesn't mean I'm going to grasp it. And when I went to the weekly charts, I got a better understanding. In the euro, you've been in a correction coming down, and this is your support zone. But are you trending? You are not. You have a higher high and a lower low. That's not a trend. A downtrend is lower highs, lower lows under the 18-week. An uptrend is higher highs, higher lows over the 18-week. It's rather simple. And no trend has a higher high and a lower low in some fashion. That's all. I don't care where it's at in relation to the averages. You're in a downtrend in the Canadian. I think you can finish off down here, but this is one of these markets I had traders go short. I don't mind saying that. And today on the break, I started saying, I'm getting concerned. Let's cut these positions down. In the Japanese yen, we already know what's going on. The new governor is going to follow in the steps of Mr. Kuroda. We've heard that from Mr. Kuroda, and we're hearing from the new gentleman. His name, I have to learn his name again. But that's what's going to be the case, and that's why you've yanked back. Can we make it back down here? You don't have to. You're in the zone where you've had the correction. You are in a downtrend, but the risk of going short and putting a stop all the way up there is too far away. You need a better chart pattern. Another firm failing in the crypto area, one of the big bank firms, I won't name them, all right, I won't punish them. They are a bank, though. They're federally insured, and everybody's running away from them. So if you do business with them, please run, okay? If they can't keep their doors open, yes, they're federally insured. Okay, what does that mean, though? It's not every penny that you're insured for, okay? Understand federal insurance at a bank. You have to do that. And what did you do here in Bitcoin? You hit the 200-day average in the Bollinger Band. What number do you think you should have taken some money off the table if you're bullish? And now you're losing the embedded reading. I could see this rolling all the way back to the 19,550, something in that area. In Brent versus WTI crude, they're rolling over the difference in prices, but the trend of the market, it's a bear market rally so far. Why? Because you didn't close over the 18-day average until today. All the other time you've been under it. So now you're getting the bullishness coming into the market, and keep your eye right there at the 100. It's hard to get long this. You're going to play this to try to get to the 88.20, but your stop has to be under this most recent low. And that low, just to give you an idea, if one were buying, it's 80.34. So you're going to be buying you're going to have a 500-point risk maybe to, on a good day, pick up 3. I don't like the setup on the weekly chart. So when I don't like setups, what do? I walk away from it, not the setup I want. You got the same setup in WTI, but where's the battleground? We talk about it, that 18-week average, that's where you're at. From here, it's going to set up. If it decides to stay above it, again, right now, you have a bullish market. The target's the 100-day average unless you take out last week's lows in both of those contracts. Rebob gasoline. I am a happy guy. I told you I thought it was going to run. Let me come back to it if I could here. And I didn't think you were going to go back and take out those lows on the daily or back here, and you've had it. Now, are we early on this run for the March run? Let's call it the spring, summer run. Yeah. but it's telling you it doesn't want to be bearish anymore. That's what I'm reading out of the chart. I'll be telling my clients and trying to find ways for them to get long now. I got what I wanted. I got my signals. Now I have to wait to see to do with it. How do you see what my signals are? Well, you join me in the mornings. At approximately 5:15 to 5:30 in the morning, you heard me, it's early. I go through with you about 40 charts at a time. And in those charts, what we do is we take a look and we rip the charts apart. I will look at both a combination of the daily and weekly, primarily Monday through Friday, the daily. But I will mix in the weeklies because I'll show you, hey, here's the signal, here's where it goes. Will I be wrong? I promise you I'm going to have bad trades. Will I be right? I promise you I'm going to have good trades, okay? There's a balance to it. You will see that. And that's what you do. I don't want to manage your money, not in the lightest. We are a brokerage firm. We'd love for you to trade with us. And if you do and you're with us, we even give on our other products all kinds of discounts to you to entice you, obviously, to be with us. But I think you'll find my brokers are great. They've been with me decades. We've been around this thing long time. Talk to you the way you want to be talked to. Self-directed. I think our platforms are as good, if not better, than anything out there. And with all the research we throw at you, being a commodity firm, I think you will love what you see. So how do you get all this? It's simple. Join me. Just in the morning, all you got to do is follow this. Follow the link up here. It will take you right into my research area. That's where everything is at, okay? Could I make it simpler? I don't think so. If you have questions, call my staff. I'll catch you all come Monday morning. Take care.